Hey, what's going on? It's Scott Taylor with SanDiegoRealCenter.com. In this video, I'm going to break down my top down payment assistance program available in San Diego. As I'm filming this, it's April 13th, 2020, and we have a lot of different things going on right now and the rest of the year. We know it's an election year. We're in the midst of COVID-19, which means that we have worldwide lockdowns, U.S. lockdowns, California lockdowns, lockdown in San Diego since I think March 15th, 20th, something like that. We know that we have record unemployment, some of the highest unemployment rates in U.S. history. And that does not include people that are furloughed, which are not working, not fired, so they're in the middle. It does include things like self-employed. So needless to say, there's a lot. We have a stock market that's a roller coaster every single day. It's going up, it's going down. They're doing a lot of different things they've never done before, allowing homeowners to not make payments, allowing renters, whether your landlord likes it or not, to not make payments, etc. Needless to say, this greatly, I can't stress it enough, greatly affects the mortgage markets. It affects which down payment assistance programs are available. It affects your credit score needed. It affects loan to value, etc., etc. So I can't stress this enough to you. If you are looking for a down payment assistance program and there's one available, like there is right now, and we'll get to it in a second in this video, you're going to need to either rent or buy. Take advantage of it now. We've had programs that I used to have that are no longer available. We have this program that I'm going to be talking about that's changed considerably, and there's a lot of talk that all down payment assistance programs will be going away at some point. Maybe they'll come back, maybe they won't, simply because there's no investors to buy those loans on the back end because they're too risky. So I want to be very, very clear. These details are accurate as of right now. And if you're looking for down payment assistance, my advice is to take advantage of it as soon as possible. All right, now let's go into some of the top points of this, a few questions and answers, and then how you can get started. Number one, you do not need to be a first-time home buyer. A first-time home buyer is classified as having never owned before, which is pretty obvious, or not in the last 3 years. So for this program, it doesn't matter. You do not need to be a first-time home buyer. Number two, this is for an owner-occupied or a primary residence only. It's not for a second home. It's not for a vacation home. It's not for an investment property. It's something that you're actually going to live in. Number three, you can get up to 103% financing. That means it covers your down payment, it covers your loan, and it covers up to 3% possibly of your closing costs. Generally speaking, on down payment assistance programs, closing costs are about 4.5%. Okay, total closing cost. Okay, so Scott just said, I just said, we can do up to 3% of closing cost, but they're going to be about 4.5%. There's a difference. I don't have that money. What do we do? When I represent you as your agent and as your loan officer, both, we're going to write the offer and structure it this way. We're going to ask the seller to pay a certain percentage or dollar figure of your closing costs. They can say yes, they can say no, they can counter. Okay, by doing this, we can then get the seller to pay some of your closing costs. We can get the rate to pay some of your closing costs, so it limits your cash out of pocket. Number four, this can be either for a conventional or FHA loan. Okay, keep in mind, for a conventional loan, you can buy a home, condo, townhome. It doesn't matter. There's no restrictions. For an FHA loan, if it's a condo or townhome, it needs to be an FHA approved condo or townhome. Okay, the minimum credit score needed is a 680. Okay, so if it's just you by yourself, we use your middle credit score. If it's you and a co-borrower, we use the lowest middle credit score. Okay, now I want to be as blunt as I can. If you use Credit Karma, Credit Sesame, credit cards, your bank, your credit union, etc., to rely on your credit score, don't. We don't use those credit scores at all. And there's no rule of thumb. It's not like if those are higher, then you're good here. If those are lower, then you're bad. It does not matter. When you apply with me and I pull your credit, we use that credit score. So do not go off Credit Karma. Do not go off Credit Sesame. I stress this because people believe that's their credit score. It's not for getting a mortgage loan, just so you know. Number six, loan amounts. So we can go up to about a $525,000 purchase price, which means about a $510,000 loan amount. Okay. Number 7, debt to income ratio. So we can go up to a 55% maximum debt to income ratio. So what does that mean? When I pull your credit, we add up your minimum monthly payments on things like your car loan, credit cards, student loans, personal loans, etc. We add those up. We also calculate what your potential future housing payment will be. That's your debt, your total debt. Future housing payment, by the way, principal, interest, taxes, insurance, mortgage insurance. We add that up. That's your total debt. Divided by your gross average income is your debt to income ratio. So let's just say you make $10,000 a month gross. That means that your total debt on your credit report plus future housing payment can't be anything more than $5,500. $5,500 into $10,000 is max 55% debt to income ratio. Number 8, let's talk about income. A lot of people believe that this is for people that hardly make any money or low income. Not true. On this program, you can make an unlimited amount of money. It does not matter. You can make $5 million a year for this program. It does not matter. Number 9, we've already talked about this is for a primary residence only. This works on a home. It works on a townhome. It works on a PUD, which is a planned urban development. It works on a condo. Okay, so that means it does not work on a manufactured home, does not work on a mobile home, does not work on a 2-unit or a 3-unit or a 4-unit. So let's just keep it simple. It works on a home, townhome, condo, or PUD, and that's it. Let's talk about documentation, and then we'll go into a little bit of Q&A. So documentation, do not overthink this. Hopefully, ideally, you should have these things already. So the application is very, very simple. Here's the basic documentation that you're gonna need. A copy of your driver's license, last 30 days paychecks, last 2 full months bank statements, all pages. If you have any kind of stocks, bonds, mutual funds, etc., the last statement. And then your last 2 years tax returns and W-2s. If you can't get those from your CPA or accountant or bookkeeper, or if you did it off of TurboTax, or if you've saved it, just Google IRS tax transcripts online. You get them completely free from the IRS website. Now, let's quickly go over 3 popular questions that a lot of people have that you might have. Number 1, Scott, what will my payments be? Will my payments be at $300,000, $400,000, $500,000? Let me break it down as an average as quickly as possible. Generally speaking, it's going to cost you about $700 per $100,000 financed. That's principal, interest, taxes, insurance, mortgage insurance. All loans are going to have those. Okay. If you have if you're buying in a condo or a townhome or a home that has an HOA, you add that on top. So $700 per $100,000 financed. $300,000, think $2,100 a month. $400,000, $2,800 a month. $500,000, $3,500 a month. If there's an HOA, add that on top. Now, that's generally speaking. We don't know what your credit score is yet. We don't know what the rates will be at the time that you apply and that we lock your loan. We don't know how we're going to structure it, whether we're going to get the soda pay closing cost or do something else. I'm giving you a general rule of thumb. Number 2, how much money will I need out of pocket? So let me give some more generalities so you have an idea. When we write an offer and it gets accepted, there's a deposit. You put a deposit into escrow. Generally speaking, in San Diego, it's about 1% to 2% of your purchase price. Let's say the purchase price is $500,000. That's between $5,000 and $10,000. Generally speaking, everything's negotiated. On a program like this, when I represent you as the agent and as a loan officer, and we have all your documents in, and I'm convinced and I know that we're going to be qualified, when we write the offer with the other agent, I'm going to say, hey, look, we're going to structure this where your seller is paying some closing costs. This loan's covering some closing costs. My buyer doesn't need to do any down payment. We're going to limit their cash out of pocket in deposit. Will you guys accept it? Of course, they can say yes, no, or counter. So generally speaking, I'm going to say 0.5%. $500,000, I'm going to say you need about $2,500. $400,000, about $2,000. $300,000, about $1,500. Okay. Once again, it can be a little bit less, could be a little bit more, but let me just give you a general. Just think about 0.5%. Also, you're going to have cash out of pocket for a home inspection. You pay that to a third-party inspector. Let's say it's about $500 plus or minus. And then there's a home appraisal. You pay that directly to a third-party appraiser. Generally speaking, let's say that's $500 plus or minus. So let's just go with that $500,000 example again. $500,000. We're going to assume you're putting in about $2,500 into escrow. If we don't need that for closing costs, at the close of escrow, you get it back. If we needed it, it's gone. It goes towards your loan. We have $500 in for inspection. That's $3,000 total. And we have $500 in for appraisal. That's $3,500 total on a fictitious $500,000 purchase. Number three, because of what's going on right now with unemployment, with furlough, etc. This is only for people that have had a full-time job or business for 2 years or longer. If you're furloughed, I apologize, it does not work. If you're unemployed or recently unemployed, I apologize, this does not work. Okay, so only people with currently working full-time job or business for 2 years or longer. And finally, last few minutes, what are your steps to begin? Number one, fill out my online application at scottsloanapp.com. That's scottsloanapp.com. You can fill that out in about 15 minutes or less from your smartphone, tablet, or computer. And yes, it's 100% secure and safe. From there, number two, you can upload your documents in what's called your own borrower's toolbox. Once again, safe and secure. You upload a copy of your driver's license with your smartphone, last 30 days paychecks, last 2 full months bank statements, all pages. If you have any stocks, bonds, mutual funds, etc., latest statement, last 2 years tax returns, W-2s. So you filled out your application completely. You uploaded all your documents. Boom, you're all done. From there, I'm going to run your credit. I'm going to send your way just to review to make sure it's accurate. So we're going to have your credit report that has your middle credit score, that has your minimum monthly debts. We're going to have your income. There we go. We have you pre-approved for your loan, and we can start looking at real estate, especially on my website to get daily listings, or if you've already found something, that we can make offers and go see things. If you have any questions whatsoever, shoot me a call, email, or text, and I look forward to chatting with you sometime soon.